All right, everyone, how's it going? Today is August 27th, 2022, and the purpose of this video is to record myself back testing my strategies using Thinkorswim's trading platform. So basically what that means is today I'm going to use the on-demand feature on Thinkorswim, which allows you to trade with a virtual account. And so basically you get a set amount of money to use. It's in this case, it's $100,000. So you get $100,000 to trade with, and the purpose is to test your strategies, to work on your trading psychology, and just to practice, practice with virtual money so that, when it comes to trading live using your real money, you'll be more confident and comfortable trading your strategies. So the purpose of this video is to educate on what it's like to actually be in a real trade. The only difference between trading in a virtual account and trading in a live account is, of course, the fact that the money is virtual versus the fact that the money isn't. So, in this sense, I want to show you guys how I trade, how I think when I'm in these trades, how I'm going to analyze the trade that I'm in. And so it'll give us a better idea on working on our trading psychology and our trading strategies live because a lot of people try to teach or try to review by looking at events that have already occurred. However, that's kind of detrimental because it's easy to see what you would have done once it's already happened. But the real strength and strategy is being able to do it in live time. So the first thing I'm going to do here is on demand. I'm going to choose a random date. So it's a date that I don't know how the price action moved for the day. So I don't have any type of bias on which way the stock is going to go. So let's choose March 16th, 2022. We're going to start it in pre-market. So it's going to be at 6. Let's do 27, 28, 6 o'clock in the morning, 28 minutes, 2 minutes until market open. Okay. That's loaded now. Go look at SPY, which is what we're going to be trading today. Okay. Now, go ahead and work on our charting. So the first thing you want to do when you're charting is simple enough. You want to find the high and the low the previous day. Okay. So let's zoom in right here. This is our previous day's price action, right? So we're going to draw our high here at 426.84. And then we're going to draw our low here at 418.42. So remember, this is going to be our high of the day. This is going to be our high of the day here. Make this green. And this price level is going to be our low of the day. Let's make this red. Boom. Those are our first 2 points. Now let's look out and take a look at how this looks. Let's look at the 15-minute. Boom. So we've now charted a section of our chart off, right? The price action high was here at 426.83, which was highlighted green. The low was 418.42, which was highlighted red. Great. Now let's go back to our chart. Next, we want to highlight at what price did the stock open and at what price did the stock close. So we can look at this on a 1 minute. And you have to understand candlestick anatomy to understand how this candle is telling you at what price did the stock open. Okay. So here we can see that yesterday the stock opened here at 419. You can see that this is the first candle right here. This is the first candle that opened up and it opened up green. and it opened up low here and it closed high. So it opened up at 419. Okay. So I like to make this white line. Let's make it yellow. And then we need to find our close. Close, it's gonna be last 1 minute candle. We closed right here. 426.15. Let's make this purple. Okay. So look, now we have four price levels on the chart easily that is not subjective, meaning we're not looking for two touches, three touches to make a support or resistance level. It's not subjective, it's objective. We just priced our high, our low, our open, and our close, and we color coded them. Now let's identify the trend. So we're going to go to the 4 hour time frame here. Sometimes on demand can be a little slow. So let's see how long this takes. All right, here we are. So looking at the 4 hour here. Oh, I think I just I did. I accidentally deleted my level, so let me draw them again really fast. Sorry about that. Accidentally deleted them, guys. So we're gonna draw them again. So when we're looking at a 4 hour, this thought definitely in the uptrend, right? See that? When you're drawing your trend lines, you want to start with the 4 hour and you want to connect swing highs and swing lows. So as you can see here, when we look at this trend, high right here, then we touched right here. And look, we had a breakthrough of our trend right here. So this is bullish. Now, let's see if we could find the nearest bottom. Let's see here. See that? One touch, two touch, three touch, four touch, five touch. See that trend right there, guys? We're having a breakout of this downtrend here, right? The bottom was right here at around 418. We broke through at 428. Definitely an uptrend. Okay. Now let's go to the 1 hour. Let's see if we can find a more recent trend that's not so wide. Okay. This is how our chart is looking so far. And so here, um, see another trend. We look left, we look at our next nearest high point, some connections here. See that? Point here, point here, point here, point here. Yeah. Let's go back to the 4 hour. Definitely in the uptrend, guys. Like this is easy to see. The only time we may want to look at puts here is if we break below this trend line here. So we'll be playing a retracement. However, this is likely to bounce somewhere in this area and continue going up because there's a lot of bullish momentum here. So let's draw some more key levels. We're gonna look for 2 touches just to make it easier for you guys to see this real quick. Just getting rid of these additional lines that we don't need. Now, let's see. Can we find some more levels? We want to find 2 touches or significant swing high-low points. So I see one right here, 422. See us seeing some resistance at 429 here. Oh, look at that. We are at a resistance level on the 4 hour. It's going to open up at 429. We might be looking at puts today. Yeah. Don't let this deter you. Remember, our objective right now is to look for support and resistance levels. So see one right here. There. One there. Now this one is subjective. However, between 18 and 15, 17 sits kind of in the middle. We're gonna go with that. Okay. Lastly, let's go to the 30-minute. Make sure I didn't miss nothing. Up here in this top region. Hmm? Chart is charted. Boom. So now look at that. Once we zoom out, go look a little messy, right? That's what it looks like. But when you zoom in, when you're trading, it's very clean and it tells you exactly when you should be buying and selling at these specific price points. Okay. So all we have to do now, go back on our extended highlight session so we can see pre-market, post-market. And now let's look at this. Up here, we got we made a pre-market high at 431. Mhm. So what this is telling me is we are not buying in this range here. This is a no buy zone for us. We only would sell in this area here, supply. Okay. Right. Get ready to trade. We got 2 minutes till market open. So we're gonna load our indicators. Boom. So let's take a look. Look at this leg here. So we can see our red trend line here. Here, we make it yellow so you guys can see a little bit more. Make it blue. See that trend line right there. See this trend line here, and then you can see this trend line here, right? Now, look how this had a crazy extension here from 413 all the way to 426. That's about what, 10, $13? Yeah, $13 move. And then in pre-market, we went from 426 to 431. It's about a $5 move. So from 431 to 416, that's about a what? 20, $18 move. So, you know, see, let's get exact really quick. 431 minus 413, $18 move. So look, we're gonna expect a pullback here. It's just we're in a supply zone up here. Um, we've had a 18-point move in a matter of one day and then the morning of today. So I'm gonna be looking for puts, honestly. Let's load our active trader. This is where we're gonna buy and sell our option contracts here. So look at this, guys. Just right off the open here, market is open now. We're above our trend line. So 428 would be our clear sell signal to short this. Also, what we want to look at is if this candle's not even just this one candle, if we can make a new high above 431. If we cannot get above 431, I'm not buying this stock at these prices. Our stochastics are showing us that we probably will see a little bit of bullish momentum. We had a crossover here. So this might be to take out the individuals who are going to be buying the top. Um, and another thing we should do is let's mark open, open 420.92. So now we're going to trade with the max of 10 contracts, or we're going to assume that we have a 10K account. Because although we have $100,000 to use, we're going to try to be as realistic as possible, only use $10,000 of that. So now we wait, guys. That's how technical analysis works. You have to wait for your opportunity for you to make a trade and it be a high probable setup, high probability setup. Right now, this is just normal price action. We haven't seen any bearish flow yet. Demand is there overall for these 5 minutes. We've been overall positive buying. Interesting though. One thing you have to do is you have to keep your eye on other stocks. So let's go ahead and take a look at how our other stocks are performing right now. Let's look at Apple. QQQ is up $4, 1.29%. Apple is up around 86 cents. BA is up 2.5. Look at Nvidia, getting a nice little pullback here. Amazon, this was pre-stock split, so it doesn't have very accurate data. But look at this. We're looking like we're looking at a little pullback here. QQQ, all the activity, it still hasn't even broken pre-market levels. Here's our high here. Pre-market low is here. We have a long way to go to pre-market lows. So this could honestly be the top, guys. Great short opportunity. But let's keep our eye out. We need to see a few things of confluence. For us to open up a short, we would need to see an increase in volume, see at least 1 to 2 red volume candle bars here. We would also like to see a reaction in our stochastics, which I'm not seeing yet, so we're going to be patient. We're looking for a short in the supply zone here. And let me be aware, guys. Market has only been open for 5 minutes, so there's no need to rush a trade. That was one of my problems. I always felt like I had to, it's that fear of missing out. Oh, I'm gonna miss the move. I'm gonna miss the move. There's gonna be plenty of moves throughout the day. So as long as you get a move that's low risk and high reward, it's a good trade. Okay. Very big bullish momentum here. This is the 1 minute. A lot of people would get trapped into thinking the best play right now is to buy calls. However, you need to zoom out and see that we haven't made a new high yet in our most recent trend here. We are um we are $1 above our open, which is very bullish. All the momentum for these 6 minutes have been all buys. Okay. But don't get tricked into wanting to buy calls right now because you have to wait. Make sure you have confirmation. These are our levels if we did want to buy and sell. If you were bullish, you could have bought here at 430. However, you would want to zoom out and realize that you are in the supply zone. So you have to be careful up here at these prices. Our start, our stochastic is we're reaching this overbought territory. So we may see a pullback soon. This will be our entry point, somewhere up here if we wanted to short this, if it makes it that far. How's about 50 cents to go? 40 to 50 cent. Now this is what trading is. Just being patient. You're waiting. You're analyzing the price movement. We're bullish still. We have bullish candlesticks. We have a long green bar here, followed by consecutive green bar. Our volume is green, green. This is all telling you it's bullish. However, one thing to note is the way my EMAs are set up. The red line is my 9 EMA and the purple line is the 21 EMA. So the 9 EMA is below the 21 EMA. So that's interesting because usually if we want to see bullish continuation, we want to see our 9 EMA above our 21 EMA, but it's below. So unless we get a crossover here, I still would not be buying at these levels. If anything, I would want to look for a rejection to confirm my short bias. However, if we do not see a rejection and we do see a crossover, I might want to get bullish then. So let's see here. We're at the top of this range. Let's see if we can break and hold. We broke this level. We need to hold now for at least another 5 minutes, another candle above. Very strong bullish momentum on this open here. Seeing a little bit of some rejections here. Very, very bullish. We're gonna be patient. Spend 10 minutes. Technically overbought on the stochastics. Now we're seeing a little bit of seller step in around these prices at 431.80. We're still $2 above our open price. So definitely have made a big bullish move. But look how these sellers are starting to step in around here. We have a red candlestick. We have some sellers trying to drive the price down around here. Bulls are still in control. Bulls are still in control. However, they are starting to see some resistance. We've had a crossover, so this is bullish. So I don't know now if having a short bias is our best idea for this trade because we are seeing a crossover in the EMAs. We have 5, 10, 15 minutes almost of strictly bullish behavior. In addition to that, stochastics is showing that the buying momentum is very strong. So we're still in the way here. We're not going to get into this trade. When you're trading a bullish setup, you don't want to buy during the impulsive move, which is what we're seeing. You want to buy on a retracement. A retracement doesn't always occur, but it gives you the best opportunity to get into the trade. For 15 minutes. Option chain. Let's see how these options are also hasn't loaded yet. Woo, look at that. Calls are up big. 200% at the money call options. Puts are down 60%. Definitely calls are the way to go at the moment. But we don't want to buy right here. We want to wait for the retrace. 15 minutes of buying. Very bullish sign. Highly, highly being bought. Right about a 98 level here. Now, to help us get into this trade, we need to look for a candlestick pattern here. You need at least 2 to 3 candlesticks to form a pattern. Crossover in 15 now. Just yesterday's high. Mark this. A very bullish day. Morning. Today's just started. 16 minutes. 18 minutes here. We still have not taken a trade on trading, all about being patient. We are above our pre-market high, which is very bullish. Which was this level right here, guys. We have yet to see a pattern we are comfortable with for us to enter a trade, so we do not enter a trade. So we may see a retracement soon. However, the buying pressure is still very, very high. We're seeing a little bit of a retracement here. I've not broken yesterday's high of 433. Still about $3 above our open price. So what I'm thinking at this moment is our best case would be to see, if we start to see some bearish signals, which I'm not seeing yet, or we can do a dip buy trade, which is we're going to retest a previous support level and see if we can get a bounce. Our entry for a bounce would either be around 431 or anywhere around our EMAs here. Oh, starting to see some wicks. So we're definitely seeing some indecision around here in this area. Let's look at this on the 15-minute. Okay. So we're starting to see a little bit of a retracement, but very small. Just because you see a red candle doesn't mean it's really retracing. You have to look at the numbers, right? The price. So at 432.45, which is the high it just made on this candle, and now we're at 432.18. Now we're at 432.10, so about what, $30 or so. I mean 30 cents, which is not that big of a retracement considering the stock has moved from 429 to 432, about $3. So 30 cents versus $3 is not that big of a retracement. So we are getting a retracement now. Let's see what pattern is forming on the 1 minute here. Okay, this is our retracement. Now the question to ask yourself is, do we want to see how far this can retrace before we start to see bullish signals again to look for a dip buy opportunity, or is this retracement going to turn into a reversal for a good short? Still can't really tell yet. However, our stochastics are looking like they might cross soon. However, our slow K, which both just measure the volatility and the buying and selling pressure of the stock, we're still heading up. So this could be a potential for a good entry for calls. We just had a small dip here. Let's see if this holds. Trying to see if we can break this 433 level, but we're seeing some more rejections here. I want to make my decision based off the 15-minute. What are we seeing? Try to cross over to the upside. Not much of a retracement. I wouldn't want to get in yet. Been almost 30 minutes, guys. Been about 24 minutes. So I haven't made a trade. It's fine. But our buying pressure has decreased. It was at about 97. It's about 90 right now. See that? I mean, it's at 80. It's at 78 now. So it's definitely decreasing here. So if we break below 431.75, I'm going to take a put position here. Let's just buy one contract. This one. 431 put. Right at the money. Okay. Actually slightly in the money. No, it's right at the money. Actually, it's slightly out of the money by $1. Yeah. So we're just gonna hold this put here. See what happens. So right here we can see our open P&L. Right now we're down about $3. It's fine. Oh, we are seeing some rejections around here. Buy another one. We're playing a retracement pullback play. We're shorting the retracement, guys. That's what we're doing right now. We're trying to. Look how much money we have in here in this trade. We have $431. Let's buy one more. Four. So we have a total of $866. Let's buy one more. Five contracts, guys. We have $1,570 right now. Okay. Let's see what's gonna happen. We're down about $55, about 3%. Our stop loss is gonna be around 20%. And if we're looking at the graph visually, our stop loss would be around 433, 432.60 right here. Percentage wise, we're down about 2%, $22. We have $1,000 in this trade, 500. 15 minutes. Remember, this could be a prime example. If this bullish momentum takes off, we're gonna close this for a loss. Well, it won't be a huge loss. It'll be a controlled loss. We're only down 4%, so you can't panic right here. Let's see the pattern on the 1 minute. See it on the 5, and then we can look at it at the 15 minute. 1 minute. The 2 minute. This 431.75 level is holding up really well. If we break this, we'll probably see a bigger retracement. So at least like 431. We're down about $85. 7%, guys. 7%. $1,000 in this trade. Take a look at our other stocks, see how they're doing. Look at QQQ. What's going on with this wick? See this? Wow. What is that? Nvidia. Look at this. Dip. And this one here. Now, guys, the reason why I would say this is a risky retracement short play here is because, for one, we haven't received all of our confirmation signals, meaning we haven't had a crossover yet on the stochastics. On the 5 minute, we haven't had a crossover yet. We haven't had a crossover on our EMAs yet. The 9 EMA is still above the 21 EMA. In addition to that, we are still highly in high buying pressure zone here. So this is I wouldn't even really say high probable short play, but it's based off the price action and the extension of the price right now. This play could work out. Um, the main goal with seeing signals like this when it's very, very bullish is to try to play the retracement pullback. However, we're going to play this retracement here. So let's look at this. So it's going to bounce off the 21 EMA here. This retracement now. See how much this will retrace. We're up about 11%. I really rejected this 431 level, which is our 21 EMA here. So we're gonna hold. We're up $100 right now. 7%. Okay. 7%. $1,100 in this trade. If we continue to retrace, we will sell some of our position at 430 here. This would be our level. We'll try to get close to here. And if this goes the other way, we're gonna sell for a loss around 432.45. And that'll be our trading day. Walk away. Some of you, this is, I mean, if you're happy with 10% gain, $100 off of $1,000, that's a good return. You could sell right here. I want to pause actually, because you can pause this. Guys, listen. Greed is one of the most detrimental things to being able to be a successful trader. Now, if we take a step back and look at what's happened, we had a short bias going into the trading day because, for one, this is heavily extended, right? From yesterday, look, we went from 413 all the way to 433. Okay. Now, there's two ways we were thinking about playing the chart today, which is one, we have a short bias, which is this is heavily extended. We did say that there was a supply zone up here, right? You remember I drew it earlier and then I got rid of it, but let me draw it again. Guys, this is a supply zone, okay? All of this here is supply, okay? This is a supply zone. Now look, we're in the supply zone here. On our 15-minute time frame, we're seeing high buying pressure by the stochastic reading 63, 80 or 77 actually. And 80 is determined to be overbought, or they say use your 80 and 20 for overbought, oversold. But look at this. If you look at the 15-minute here, you can see that the price is currently bouncing off of the 21 EMA. right? If you zoom in right here, you can see it bouncing off right here at 431.04 or 10. So that's a bullish sign still, guys. So that means that we were right by shorting this retracement, which we did successfully. We're shorting this retracement. However, we have to be careful holding this trade because this might bounce and extend further up. That's how it works when you have a uptrend, right? You go up, come down, but not down to where you're uh but not down into where you are lower than your first low. So you can see that low, see how, and then you'll come up here, then you're right there. See that? Uptrend. So this is what this could do. And so what we're doing is we're playing this right here, this retracement. Boom. But you have to be careful because playing this retracement, shorting this retracement here, you have to expect if this bullish trend is intact, it's going to find somewhere to bounce and extend for another impulsive move for another leg up. We have to keep that in mind here. So if you were smart and you were risk adverse, you would take profit right now. You have 5 contracts. You have $1,000 in this trade. You're open 10%, $100 on the day. It's been about 36 minutes. You made $100. That's a good return. But let's continue watching to see what's gonna happen. Now, if we don't sell right here, and this ends up reversing on us, and we end up hitting our stop loss, the most we're gonna risk on this play is about $300, 30%. Now, don't beat yourself up if you didn't sell right now and you ended up letting this trade go red and hit your stop loss because you have to be comfortable with the decision that you're making that you don't want to take profit right here because you're thinking this can go potentially lower, right? You don't know that for sure, but you think. I mean, we have on the 15-minute, we have 2 red bars here. We're looking at some overbought territory up here. There's a possibility that this can continue going down and you can get a higher percentage return. However, you have to be comfortable with the risk that you're going to risk this profit that you can take now, and you're going to risk your position to with the idea that you can probably get a higher return. Okay? Keep that in mind. Okay. You know what, guys? I'm gonna pause here. For the purposes of education, we're gonna sell here because wait a second. We're all learning here together. So we're up 13%. You could sell here, which would be smart. But you know what we're gonna do? We're gonna scale out of our position, right? So we're gonna sell 3 contracts and hold 2 of them. The reason we're going to do that is because we're going to sell some of our position to lock in some of this profit. However, for the potential that this can continue going down, because we're seeing this crossover building now here, and we see more bearish volume, there's a potential that this can reverse out of this supply zone. So we want to be holding some contracts so that we can take advantage of a bigger move. So we're going to sell 3, hold 2. Let's do it. 3. We're going to wait. We're going to wait. We're bouncing. We're pushing through that 21 EMA. We're still going. Look at that flush, guys. Sell 3. We're holding 2 now. We sold 3. At around 15, look at 20%, we sold three. We have $200 that we've made today. We have $500 left in this play. Let's just sell the rest, guys. Let's get out of here. Or should we? Let's see. We're getting some support at 430. I think we sell and we wait. Boom. See how we're starting to see some rejections around here in this area. Look at the lows. You see our uptrend is still intact here. So to limit our risk exposure, we decided to just take profit. Now, let's think about how much money we could have made on this play, or what we did make, right? We made $186 on that play, which is great. We put in 1,000, we got more than a 10% return. Okay. So, and to be able to do this calculation, all you would have to do is reverse math, right? So to find, if you wanted to find 10% of 1,000, you would do 1,000 times 10%, right? That gives you 100. Now, our answer, we already know our answer. We made $186. So what you would do is you would take 186 divided by 10%. 108, 1,860. So we know that we didn't put in $1,800. So our formula is wrong. So what we should do then is we'll take 186, our answer, divided by our investment, which was about 1,000. 18.6%, guys. Okay. That was our return. That's a good return, guys. So, you don't want to be greedy because now let's look at the math. So some of you may, oh, that's not impressive. You only made $186. Okay, let's think about two things. We made $186 in 37 minutes. Okay. Also, let's say you had a bigger account, right? Our return on this play was 18.6%. Right. So let's say we have put in $5,000 on that play. Same analysis, same criteria, same everything, right? If we would have put in $5,000, that same play would have netted us around $900, guys. $900. That same play would have netted us 900 bucks. Okay. So that would have been, some of you guys are, oh, I've never made $1,000 in a day. You could have made $1,000 in a day on this one play. Had you have just instead of putting in 1,000, could have put in 5,000, same return, 18%. That's your $900, right? Let's say you would have put in $10,000. Same play, same analysis, same criteria. You would have made 1,800. Okay. So the purpose of this, video was great. It achieved its goal, which is to show you that just using a small amount of money, you can make money trading stocks. Okay. We just did it right now. It took us 37 minutes. We made $186, right? So when you want to think about scaling up, then all you do is you do the same thing that you would do if you had a small amount of money, and you do the same thing and you just add a bigger amount. So instead of us buying, we bought 5 contracts, we would have bought 10 contracts. Or instead of buying 10 contracts, we would have bought 15 contracts, right? So that's all you do. So let's do this. So we're all out of our trade right here. We decided to not be too risky, take our 20% profit, call it a day. Now let's see what happens within the next hour. Let's fast forward time. Let's see what happens within the next 40 minutes, actually. No, let's go by hour. See what happens next. Should we have held our trade or was it good that we sold? Let's find out. Look at this, guys. Look at that. Look at this, guys. I want you to understand how important it was that we just sold. Because look, you see this trend line I drew earlier? I drew this earlier at right before I fast forward time. So I'm going to extend this. So we're going to change the color to very bright yellow, right? You remember I drew that line earlier. Let's extend it. Look at that. Our trend never broke, right? Our trend never broke. And so, like I said earlier, there's two ways we could have played this today. We could have shorted the retracement, which we did successfully, and we sold at the perfect time because look at this. We ended up bouncing right when we were selling at our EMAs. See that? We ended up getting a bounce. We ended up breaking through, but we held support at 430. So we successfully shorted the retracement here. However, a more experienced trader, not like, just in general, they could have shorted this retracement, sold their whole position, and repositioned and bought back in right here for a dip buy. See that? This would have been the entry point for a dip buy right there. We would have seen this bullish momentum, right? We would look at this bullish engulfing momentum here. Bullish engulfing. We would have seen that. We would have broke through our level at 431 buy, and we would have rode it all the way to 430. Once we broke our yesterday's high at 433, then we're in call. But yeah, guys, I wanted to show you, a trade live, paper trade, of course, but right in the beginning, I stated how much money we had, how much money we were going to spend. At first, I actually said we were going to act as if we had 10K, but I decided to just act like as if we had 1K because I know a lot of people have small accounts. So that was great. We got a 20% return on our play, and beautiful. And if you guys have a question on what contract we bought earlier, we bought the 431 put. So when we bought our contract, we were somewhere like around here, around like 650 or so. Yep, we bought right when we broke through this 431 level. 431 is considered at the money because it's the closest strike that's near to where the price is currently at. So we bought out the money. But yeah, guys, I hope this was helpful. I'm gonna, record some more videos over the weekend, trading different setups, analyzing them as such, live trading with the virtual account as practice. So that way, when the market opens on Monday, we're ready to kill it. All right, guys, have a good one.